Hello everyone, welcome back. When it comes to smart money concept trading strategy, it's all about finding the footprint of the bank and big capital traders, and then entering with the same direction as them. And that's exactly what we use OrderBlock for. In this episode, I'm going to show you the best way to use OrderBlock to find setup in the same way the big players are trading. Is this something that interests you? Subscribe to our channel because we have more videos like this in the future. Let's get started. Before trading OrderBlock effectively, you need to know a few things about smart money concept trading, such as OrderBlock, chain of character, and finally, breaker structures. So, an OrderBlock is a final candle or series of candles before an impulsive move that leading to change of character or breaker structures. Here the example of what bullish OrderBlock look like. On the left side, we can see one bearish candle before an impulsive move to the upside. And on the right side, we can see 3 bearish candles before an impulsive move printed. Then we know this bearish candle and wait for price to come back and look for an entry. I will show you a real example soon, but now that you know what OrderBlock look like, let's move on to change of characters and breaker structures. So, change of character is created when price change direction from bullish to bearish and vice versa. For example, here we can see price keep making higher high, which means we are in an uptrend. Then price take out this higher low where it should hold the price to continue the uptrend. But because this low fell to hold price, it created a change of character. But remember, change of character only happen when higher lows have been broken previous higher high. Otherwise, it's not a valid change of character. Okay, what about breaker structure? Breaker structure is a little bit more simple than change of character. Breaker structure is simply price breaking structure in the same direction of the current trends. For example, here we can see price keep printing higher highs and higher lows, meaning we are in an uptrend. If these higher lows continue to break previous higher high, we consider this is a breaker structure. Okay, but how can we use this to trade our order block? I got you. First, we have to identify an impulsive move that recently created. Then look to the left of it if we can find our order block. After we found our order block, we now have to check if that order block created break of structure or change of character. If it does, then we have a valid order block to use. In this case, we can see that our order block have created a break of structure. So this is a valid order block. So now all we have to do is wait for price to come back to our order block zone to look for our entry. When price come back to our order block zone, we can go to a smaller time frame to look for more confirmation. As you can see here, we have another breaker structure created in smaller time frame. This gives us more confirmation that our trade has more probability to play out. Here you can entry when price come back to your second order block and put your stop loss a few pips below your order block. And as you can see, price playing out beautifully. Now that you understand how to use OrderBlock, you may think that there's so many OrderBlock out there. Which one are we going to use? I have the answer for that. Here's how to pick the best OrderBlock to use for your entry. First, OrderBlock that has fair value gaps above or below them. This is depend on which OrderBlock you use. If you use a bullish OrderBlock, you want to see fair value gaps above that OrderBlock. And if you are using a bearish OrderBlock, you want to see fair value gaps below it. But why do we want to see fair value gaps near our order block? You see, when price rapidly moving away from order block, it indicates that big players are in the market. Let's take a look at this example. The gap that you see is telling us that there are a lot of buying, but no selling. So price will come back to fill those gaps before continues. You can also call this imbalance because there are only buyers and no sellers. After price filling those gaps, we can expect price to go higher. Number 2, order block that has liquidity above or below them. Again, this is depend on which order block do you use. If you use a bullish order block, you want to see liquidity above that order block. And if you're using a bearish order block, you want to see liquidity below it. So why liquidity important for a good order block? You see, when price is indecisive, it could move sideways, and that create a lot of liquidity. And this often seen near your order block level. So price most likely will take out those liquidity first, then go to your order block before continue its direction. For example, we see that this order block has a breaker structures and also a fair value gaps, meaning it's a valid order block to use. But if you look closely here, we can see that there is also liquidity that built up below it. So at this point, we expect price to come down, take out those liquidity, and then go to our order block zone, and then we can look for an entry. So this is all the component that make an order block a good order block for you to use. So again, remember, look for an order block that create either change of character or break of structure. Only it has one of these before you look for other confirmations. Then you want to check if the order block has fair value gap above or below it. This is very important because price needs to fill those gaps before continue its trends. And lastly, look for liquidity. If you don't see any liquidity, it's possible that the order block that you wait to trade from is the liquidity that the market want to take out. So be careful before you choose any order block to trade from. So guys, this is the end of this episode. Thank you for watching this video. Subscribe for future contents and I will see you in the next video. Peace.